So super excited to have you guys here. Super excited to talk about this new product from American National, Mr. Tim today. Definitely something we want to jump back into, kind of go back to some annuity stuff, really revisit on that. I know a lot of you guys have talked to me recently, have had questions about it. So it's a very, really good product, very simple product, very good comp level. So we definitely want to dive into it and talk a little bit about it. So if you guys have questions, I see you guys coming on right now. You guys have questions, definitely let us know. We've got Mr. Tim Burns with us today with American National. So I'll stop talking and let him jump right into what we're going to go into today, guys. So again, thank you for attending, and we appreciate it.
Good morning, everyone, and thank you for the Eldercare team for making this opportunity available. And of course, for you choosing to invest your time with us this morning. My name is Tim Burns, and I'm a regional sales manager for American National. I support our top level agencies across the country, and I've been at American National for 3 years, but I bring 25 years of wholesaling, national account, and leadership experience on the sales side to my role. I will just share with you here briefly this morning a little bit about American National and who we are. We're an organization that was maybe the next slide there, Brent. But we're a company that was established in 1905. We've been built on a strong foundation of prudent investment and regular growth. Our financial strength and operating integrity have really positioned us as a leader in the insurance business. As you'll see from this slide, we're A-rated with AM Best, S&P, and Fitch. And then we've been recognized for a few different industry awards, one of which I'll just highlight because through the one with AM Best, which is found there in the middle, it just kind of recognizes that it's called Standing the Test of Time, and it recognizes insurance companies that have been A-rated for at least 75 years or longer. And for us, it's been 83 consecutive years, and that makes us only one of 19 U.S. life insurance organizations to achieve that goal and be recognized there. So do like to point that out. That's a little bit about who we are, but we are a company that's been owned recently or acquired recently by Brookfield Asset Management. Their Brookfield Wealth Solutions group kind of leads us day to day. And they're a forward-looking company. They're trying to establish a long-term participation in the insurance and reinsurance industry here in the United States. And they chose American National to kind of be their flagship carrier as they make that entrance into the U.S. market. Next slide, Brad. This next slide is simply a love note from our compliance team. It's just a disclaimer. I see Brett smiling. All carriers have these little love notes from their compliance teams, but obviously, as an insurance company, we do not provide legal or tax advice. Any of those types of questions, we would have you or your client kind of refer to the professional in their circle. So, next slide. And what we're really here to talk about today and to bring you up to speed on is a new product that we launched in December. It is called the Rate Certainty Annuity. It comes in a 7, a 10, and a 20-year option. On the next slide, what we'll see is some of the product highlights. And it's really an indexed annuity. So it's a fixed indexed annuity. It's a single pay or single premium FIA, but it has upside potential of the FIA, but the simplicities and the guarantees of a multi-year guarantee annuity, or what sometimes we refer to as a MYGA. And why do we say that? Well, we have guarantees tied to this, and based on the crediting strategies and rates offered at issue, those are locked in for the guaranteed period you select. So if you buy the 7-year product, those rates available at issue are locked in for that 7-year period, or likewise for the 10-year period. You won't have me talk too much about the 20-year product. While it's available, I do personally think it's hard to justify suitability for a 20-year sale. So we'll focus our energy and efforts today as we look at this presentation on the 7 and the 10-year product. But again, keeping things simple. Now, as I travel the country and I meet with different groups, I talk to advisors who are talking with their clients. There's been a shift over the last couple of years to really focus their indexing approach to the S&P 500. They're doing that because they had spent some time in proprietary indexes and even some of the low volatility S&P 500 indexes that are out there. And what they found sometimes is they have to sit down with their client, even though it looks like on television the S&P 500 has been going up, and that they sit down with their client on their annual review and have to tell them that they've earned zero. And so there's been a shift away from some of those proprietary and fancy indexes back to the S&P 500. And we'll talk a little bit today about how this product is very simple in that it has one strategy, one index strategy, and that is the S&P 500 Dynamic Intraday TCA Index. And there are 3 crediting strategies, 1-year point-to-point strategies to choose from, and a declared rate. So we've tried to bring a product that is very simple. It's a simple story for you to have with your clients, and a simple story for the clients to understand. And as we go through this, hopefully I can show you how that unfolds. The protection that's associated with this product, just so you know, at American National, our annuities all offer a 10% free withdrawal provision in the first year. So a lot of times the withdrawal aspect for a policy tends to wait until the second year. We're one of the few carriers in the market that brings products on a regular basis that allow you to access up to 10% free withdrawal in that first contract year. We have some other things we'll talk about, such as waivers for confinement, terminal illness, or disability. All these things are going to be state specific. You'll have to, as you approach this product, look and see your specific state and how that applies. On the next slide, we'll take a look at our state availability. Now, this was not filed in New York. We have no intentions of filing it in New York. And currently, the only state that's pending approval is Oregon. This means that it's been approved in Hawaii. It's also been approved in Puerto Rico, for those of you who may sell down in that market. So again, it's available everywhere currently except for New York and Oregon, with no intentions of filing it in New York. The other thing I'll notice, we should go to the next slide here, is that we do have a 5-year version of this product that we expect to bring to market by the end of second quarter. So it'll have a 5, a 7, and a 10-year option available. Now, as we look at the actual product specs, it is a single premium annuity, as I mentioned. It is available for issue ages through age 85. As I mentioned today, we're going to focus on that 7 and 10 year. So it's from 0 to age 85. If someone were interested in the 20-year option, they would have to purchase it by age 50. We do have minimum premiums associated. You'll see on the not qualified, it is $10,000. The qualified is $5,000. The other thing I always point out is that top bullet on the right-hand side. We allow for upwards of $3 million without home office approval for a household. And most carriers have a $1 or $1.5 million household max. We have a $3 million household max. And that's a, as Brent might be able to share with you, that's a pretty impressive number without having to get pre-approval. Now, we can go above 3 million. Certainly in this product, I think there would be some consideration to do so. So if you are interested, you have some affluent clients who are interested in repositioning some of their safe money, and it's above 3 million, please reach out to Brent, who can contact me. And there's a form we can complete for a jumbo approval, pre-approval, that can be then submitted upon approval with the application. But again, just note that that's a very large max, and we're one of the few carriers that actually go that high without any type of pre-authorization. The product doesn't have any riders, and on this next slide here that Brent's brought up, you'll see the actual index again is this S&P 500 Dynamic Intraday TCA Index. A few things that I'll mention. Again, it is on the backbone of the S&P 500. Of course, it's one of the most widely used crediting indexes, the S&P 500. The S&P 500 was actually created in the 1950s, but it was not designed for the insurance wrapper that we are accustomed to seeing today. In 2022, just to share with you, there was over $11 trillion either indexed or benchmarked against the S&P 500, which has an equivalent trading volume of more than 200 trillion for the same year. This particular index does have some benefits. I'll share those with you here as we look at this. It provides long-term S&P 500 exposure. It has a volatility target of 15%. It has the ability to be nimble and more responsive to change in the volatility other than traditional volatility control. So this is a next generation volatility control. And how is it that they accomplish this ability to be more responsive? Well, the name intraday actually suggests that there are 13 windows during the day in which they can choose to rebalance this product if they see major market trends and movements. And when volatility is running low, the index may use up to 250% leverage to increase its S&P 500 exposure. And as a result, it increases its upside potential. On the next slide, there's a few additional bullets that you'll see. But again, I mentioned those 13 observation windows over the course of the day. Now, they're not going to rebalance 13 times in a day. It's more likely they're going to rebalance once in a day. But most S&P 500 indexes out there are not doing anything during the day. They're choosing to look at how the market moved during the day. And at the end of the day, they make a decision to rebalance. And when they do that, there can be upwards of a 2-day lag for it to actually occur. And because we're able to make that rebalance during the day, that's what allows it, of course, to be more responsive. Now, what they're looking for are major momentum triggers where there's enough volume or trends to justify that rebalancing. So anyways, the index itself has been around since August of 2023, but we do have, of course, back testing and some numbers that you can see through illustrations. And I strongly encourage you that, as you look to position this with your client, that you have an illustration ran so you can see how it's performed in the most, or would have performed in the most recent 10 years, the best 10 years, and the worst 10 years. So it helps tell the story to your client. Let's look at the next slide. So the index itself, as I mentioned before, there is one declared rate bucket. There's also then going to be 3 one-year point-to-point triggers. And we'll walk through how those different crediting strategies actually work. I'm going to use today, for our example, the current 10-year bucket rates, okay? So everything you see here today would be available on the 10-year product. But again, it's a declared rate and 3 different one-year point-to-point trigger strategies. And so let's look at the next slide. This is going to be the declared rate. As Brent punches through here, you'll see that it's currently at 3.8%. And that is, again, a bucket that they can move in and out of. That's one thing I didn't mention here. There are other FIAs in the market today that offer or are beginning to offer locked in rates. But when they lock in the rate for you, you're not able to move your money in and out of the index. Whatever strategy you go in that they lock it in for, whether it's 7 or 10 years, that money then is tied up for that period of time. For us, these rates are going to be guaranteed, but you have the flexibility on the annual anniversary to rebalance your positions or reallocate as you see appropriate. So let's go ahead and begin to look at our different indexing strategies. So this is going to be our performance trigger. As he punches through here, you'll see that if the index in that one-year point-to-point is flat or positive, the index will be credited with 7.8%. If it happens to be negative, it will be credited with the floor of 0, right? So the client actually keeps their money. Again, this is the performance trigger. It's going to be one of 2 options. If the one-year point-to-point strategy is flat or positive, it will be credited at 7.8, or if it's negative, they'll get 0. Now, on the protected trigger, we'll go back a slide there. On the protected trigger, it has less upside potential. As he punches through here, you'll see what they're choosing to do, and go ahead and hit the next one as well. What they're choosing to do is to have a floor. And that floor in this case is a 2% floor. But in order to get the floor, they're giving a little bit upside away. So if that one-year point-to-point strategy if they put their money in that protected performance trigger, in that one-year point-to-point strategy is flat or positive, they'll be credited 5.8%. But again, the downside protection here now, if it's negative, is 2%. So, and let's look at that third crediting strategy. This is called an enhanced performance trigger. This has a little caveat to it. So you'll see there where it says if the index is up and it's greater than 5%, then they get 9.4%. So what does that mean? In that one-year point-to-point strategy, now we're not looking at it being flat or positive. We're actually talking about it being greater than 5%, 5% or greater, they will be credited 9.4%. Okay, so if that one-year point-to-point strategy is 4.99%, or even 4.85%, or negative 32%, then it will be considered less than 5, and therefore they get the floor of 0. Okay, now the question that I get asked is, why would anybody do that? If you got to be above 5% that one-year point-to-point to get the 9.4. Well, if you historically look back at the S&P 500, when it's up, it's generally up more than the 5%. And so this is a threshold, a 5% threshold that has to be met. And if it's met, again, at 5% or greater, it will trigger that 9.4%. Or again, if it's lower than 5%, it will get 0. So That's how each of those different strategy options work. Let's go ahead and look at the next slide. Each of these, as you'll see, just kind of punch through to 2 more times. And then as you see here, there's going to be 3 one-year point-to-point strategies. Each, as you think about talking to your client, is going to have one of 2 outcomes. And you don't have to use all 3. You could put 100% in that performance trigger. And then your client's looking at one of 2 outcomes, right? What we've tried to do with this product is we look at it as there are agents out there who understand how the MIGA product, the multi-year guarantee products work. There's been a lot of demand for that over the last couple of years. And we want to help those agents begin to transition clients away from the MIGA opportunity because we do expect over time the rates that we've been seeing historically here, that have allowed us to provide upwards of 5 or 6% in guaranteed rates. Those rates are going to begin to come down. We saw some volatility this week where the 10-year Treasury yield has dipped to 4.1%. It might have been early last week or mid last week. There's a lot of uncertainty today with whether or not we're going to head into a recession. We see tariffs on, we see tariffs off. All that uncertainty, the market doesn't like it. We see then a reaction from the 10-year Treasury as it bounces up and down. If that 10-year Treasury were to dip below 4%, we're going to start to see some lower rates available on the MIGA side. But we do believe there's still an opportunity to help your client get a stronger return using FIAs. And this product being very simple, having one index strategy, having 3 one-year point-to-point buckets and a declared rate option, we think it makes it very simple. That plus the guarantees of a MIGA, we're locking in these rates. And so what Brent's done is he's pulled up a slide here that you can see where these current rates are at today, not just for the 10-year product that we walked through, that's the center column, but also the 7-year product, same 3.8% declared rate bucket. They have a trigger rate of 7.55% on that performance trigger option. And then they've got the same 5.8 and 2% floor on the protected trigger option. And then you see just a slightly smaller upside on the enhanced trigger at 9% in that 7-year. But these are the effective rates as of March 7th. And so anybody that would buy this today, if they're buying that 10-year product, would lock in those rates for 10 years. I can't emphasize this enough. You don't have to come back on an annual basis with the carrier letter and then try to have a conversation with the client around, well, your caps have moved, your participations have moved. So let's talk about what makes sense going into this next year. Let's look at what, let's talk about why you didn't get a crediting rate, why you got 0. So we're trying to simplify that story. We're trying to clean this up. We believe this does it. Again, the one thing that's very unique about this is that these rates are locked in and you have the ability to reallocate on an annual basis. Okay. If we look at the next slide, let me go ahead here and so this is the surrender charge schedule. So then, I'm asked, what does that look like, whether it be on the 7, the 10, or the 20-year product? As you see here, it does roll out over a 7-year period. California, as you'll see on the 10 and the 20-year product, do have a different schedule. But as it relates to the 7-year, they're identical, whether it's California or any of the other states. Rolls out from 9, 8, 7, 6, 5, 4, 3. And then in year 8, it's out of surrender charges. Okay. On the next one, on the 10-year, we'll see where it is a 10-year schedule for all states other than California. California has only approved what is a 9-year CDSC, or contingent deferred sales charge period. And they both roll out for 9, 8, 7, 6, 5, 4, 3. And then you see it begins to change their year 6 as it tails out. And then year 20, just for giggles to see what that looks like, you'll see on the next slide here, it is a 20-year schedule. Some people are a little amazed by that, but it is a 20-year schedule outside of California. And you'll see what it does. It's not higher than 9%. It's only 9% that first year. Rolls out like the others do, 9, 8, 7, 6, 5. And then as you can see here, it kind of gets hung up at 5% through the stretch of that duration. But again, probably not selling many 20 years, so we don't have to spend much time there. On the next slide, as we move through this, we're going to see the waivers that are available with this product. Again, I would say you have to check all state availability for this because not all states have approved all 3. But we do provide, in the event that the owner or owners are sick, that they have the ability through a terminal illness approach, disability, or confinement waiver to be able to access more than their 10% withdrawal provision in any contract year. And so that's a nice feature that's included with this product. And then just as a reminder, as we look at the next slide, this is a new product. If you've been appointed with American National previously, or if you're just going to get appointed with us for the first time, do know that because this is a new product that rolled out in December, any previous product training that you might have had will not cover this product. So prior to selling this product, you will need to complete the specific suitability and product training on this product. Again, the product's called the Rate Certainty Annuity. That product training can be accessed through our portal directly or through the Reg Ed site using the code you see here on the screen, LAD 10157. And that stands for Life Annuity Distribution. So LAD 10157, again, through Reg Ed, or you would be able to find that through our portal site once you're appointed and have access. Now, we're not talking about comp, but we do want to point out that American National is actually offering an agent commission production bonus for 2025. This is retro back to January 1st. So if you've done a production with us, those will be counted. This is specific to fixed indexed annuity business. But as you'll see here, if you do upwards of 2 million plus, you have the ability to earn anywhere from an additional 25 basis points up to 150 basis points. And so on top of what is already considered to be a competitive commission on this product, you have the ability to earn more by doing additional FIA business with American National. Now, again, I mentioned that we have a $3 million household limit. So if you have an affluent client who's looking to put some of their safe money into an indexed annuity, you could literally do that with one case and immediately trigger yourself an additional 25 basis points. Now, this is paid quarterly. The first payment is going to be paid in April. And as you achieve different tiers, again, we're going back to January 1st, we'll continue to collectively pay you the full amount for all dollars paid or produced from January 1st. So just a little additional bonus there that I would be remiss if I didn't point out. And then, the next slide just is kind of opening things up to questions. So I did move quickly, but I wanted to keep us on time. Wanted to be able to get to a point here where, we're introducing the product to you, but we can open it up for some questions and still be within your 30-minute time frame.
Awesome, Tim. Listen, that's very thoughtful because sometimes we're running over. That's for sure. So I don't have any questions, as of right now. Let me double check that, make sure. Yeah, no questions now. So obviously that means good information, simplified information as well, which is what we're always looking for. A lot of these agents are obviously on the go. So being able to, tune in and, like you said, again, stay on time and also get really, really good information, informative information. Boom, there's a question. So need full surrender for 10 years. Need full surrender for 10 years.
Yeah, can you help me with the question again?
Yeah, it says need, and I want to make sure. It says, I'm guessing, do you need full surrender for 10 years? That'd be correct, Shirley? Oh, need slide.
She wants to go back to the 10-year CDSC slide, maybe?
Possibly. Let's do that. Yeah. Let's get back there.
There you go.
There we are. Let's see. Went past. So there's that. Take a screenshot, all that good stuff. But yeah, like I said, again, one of the big things for us is just being able to have simplified annuity products that agents can use, because a lot of times I would say the best thing is you don't want to overcomplicate it if that's not something that they're doing at all points in times, or they're not doing on a daily basis. Got it. So yeah, simplified products. Let me go back over here to the front. Looks like that's all the questions, maybe. Contact information right there as well.
Yeah, so that's a contact number for our field support center here at American National. Of course, when you go into there's an option for life and annuities. You would take option 1 for the annuity side and then listen to the prompts. 1 is for pending case status. 2 is to speak with a representative about products and illustrations. But of course, we would encourage you to continue to work with your elder care team as well. But if you want to contact us directly, certainly that would be the number and the team to reach out to. That's our field support center.
Good deal. Well, Tim, I'm going to wrap it up. That way, I'll get a lot of the questions. I can stay in contact with you, of course. But I definitely appreciate you attending and obviously presenting. And I appreciate all you guys for attending as well. And I'll shoot you an email with if I need anything more. But other than that, I appreciate it.
Well, thank you. Yeah, we're excited. It's a very simple product. It provides, like I said, that FIA upside, but the guarantees of Amiga. And again, a strong product here in the marketplace. Appreciate your
Absolutely.
time. Thanks,
Yeah,
Brent.
not a problem. Thank you.
All right, buddy. All the best.
Yes, sir.